Elliott Wave helps us understand the direction of a trend. It helps us to understand the underlying structure of a chart, and it kind of brings order into chaos. Or rather, actually, it just makes the order that's already there visible. For most people who look at charts, charts seem chaotic, random, but Elliott Wave brings order into chaos. But when you get a chart, how do you actually start a wave count? That's a question I often get asked. Today I want to take you through a complete Elliott Wave count, how to start it, how I would start it. It's a complete labeling exercise where I will show you my thought process. And yeah, we are going to label a stocks chart together today. Let's go. Yeah, hello, welcome to another MCO market update. Today, it's more of a tutorial, not so much a focus on the actual chart or labels or what a certain chart is doing. It's less of a forecast video. It's more about how to approach a price chart and how to label it. So I would say we don't want to waste any time. We jump right into it, and I want to take you through the whole thought process. It is important to understand that really doing a proper Elliott Wave count, it can take, depending on the complexity of the chart, it can take an hour or even longer sometimes. So this is more of a quick run through. However, I want to talk to you about the most important aspects that need to be considered when counting the waves. So we want to start here on this chart. It's the Coherent Corp chart, and it's important to understand that Elliott Wave counts are they are a tool, right? Of course, they are to a degree predictive, but they are mainly a tool to help us understand the trend, key invalidation levels, risk levels, and which Fibonacci levels, for example, to use, because which Fibonacci levels I'm using depends on the kind of wave I'm in. So all of that is very important. Also, we want to understand, can I trust the chart or rather not, depending on whether an impulse is unfolding or a diagonal pattern. So if you watch the video in half a year or a year and the price has done something different or broken below a level, this doesn't mean the wave count was wrong. It simply means that at some point, because wave counts are breathing, they are dynamic. The market is breathing, not the wave count. The market is breathing. So it's important to understand that it's just a tool that helps us to understand levels, essentially. It's a little bit more complex than that, and there will be further videos where we talk a little bit more about really what Elliott Wave is for in much more detail. But yeah, let's approach it. I just want to make sure to understand that this is now, while we look at the chart with the data we have available, this is going to be the count we can go with. And there will be levels. And for example, if those levels get broken to the upside or the downside, then this would be a signal that the analysis gives us a signal that the market rather goes one way or the other. And that's one of the great things about Elliott Wave. One of the advantages is that we always get a second scenario, sometimes even three scenarios. What many people see as weakness is actually a strength, because it's the same like when you play chess. If you've ever played chess, you know that you have to think about what your opponent could do. There's not only one scenario, right? So if you just rely on one scenario, you will get beaten. So it's not so much about understanding what will happen in the future. It's more about understanding what happens right now on the chart and how can I position myself in a way that makes sense, keeps risk manageable, and in a way that, I can just manage my risk and ideally enter a trade that makes sense from a strategic point of view, where I have a good reward to risk ratio. So this is just before we really dive into the wave counting, more from a mindset point of view, how to approach such a chart. Now, when I look at a chart like that, it is very important, as the very first thing I need to do, I start with a bigger picture. So we want to zoom out as much as we can. This is the monthly chart. So we probably won't really go into nano counting here today, but we want to start on the larger time frame always, because the larger time frame dictates the environment. It tells me then later, when I go into the smaller time frame, which wave counts are actually available. Because if I know the larger degree pattern, then I know which wave counts I can actually use, which patterns, as per the rules of Elliott Wave, the rules of market structure, are actually allowed to evolve, and what can I expect. Because if I don't know the overall context, then I can make something up on the smaller time frame. That's not very helpful. I need to know the larger context. And then I always start at the all-time low. There might be exceptions here and there, but usually we start at the all-time low, and then I try to identify, first of all, I have a general look at the chart, right? I run it through kind of in my mind, and I need to understand, okay, what's the first rally and the first higher pullback? Like characteristic elements on the chart. And I think it's quite clear that the first rally was this one between 1993 and 1997, and it looks like a 5-wave move to the upside. Now, normally what I would do, I would go into smaller detail, take a look, is it really a 5-wave move, and so on. Because we want to do the micro counting as well when we are kind of deciding that it is one pattern or the other. But normally this could be the second step. So it's all about, first of all, getting something onto the chart, getting a framework that I can use that makes sense. And it's not about having the perfect count or the perfect chart. It is more about having a chart or a wave count that actually works, that I can use for trading. Now, that's one thing. So I'm looking at, okay, that looks like 5 waves up, 3 waves down, great, higher, low, perfect. It reacted probably to one of the key Fibonacci levels for even here, what could be even a wave 2. It's a bit shallow for a wave 2, but valid. So this set of Fibonacci levels. Okay, so we've got that. And then what happened afterwards? Now, the problem is, and I've looked at it before, but this is a 3-wave move up. So normally I would think, okay, maybe this is an impulsive wave count because I've got 5 waves up, 3 waves down, great. But the problem is, this here is a 3-wave move. Now, if you know about Elliott Wave, it is impossible to have an impulse, yeah, where this is a wave 1, and this is a wave 2, and then you have another wave 1, which is a 3-wave move. It's just not valid unless you had another leading diagonal or something. But this doesn't apply here because of the proportion. So yeah, it cannot be a 1-2, 1-2 setup. It just can't be that. And also that kind of makes sense because this here all doesn't really align with the 1-2, 1-2 setup. So what would make sense? The only other 5-wave pattern, if it can't be a wave 1, it has to be an A wave. Okay, it has to be an A wave. This has to be a B wave. And then I have to consider, okay, maybe that C wave is still unfolding. Is that realistic? We can check that. How do we do that? Normally we say that a C wave can reach the 100% extension to the 161.8 extension. It's a common target zone. It can also go higher, but just to understand if it's actually reasonable to still see it that way. Yeah, look, it reacted to the 138% extension. It hasn't even reached the 161.8 extension. So yeah, I could see it as an ABC structure. Great, okay. So that gives me a lot of options because a C wave can be an impulse, but it could also be a diagonal pattern. Now, it certainly isn't an impulse. We already talked about that. So this move up is likely going to be a diagonal pattern. We know that a C wave is a 5-wave move. So knowing that we've already reached the 138% extension, again, there is no maximum for a C wave, but usually you wouldn't expect a C wave to go significantly beyond the 161.8 extension. So we are probably quite close to the end of the C wave. So my thought process would be, okay, it could be a diagonal pattern. What is a diagonal? It's a 5-wave move. Subwaves are corrective. So then it makes sense to call this a wave 1, this a wave 2. So it's all about just having a framework on the chart, right? So then I have to think about, okay, 3rd wave, 4th wave, 5th wave, where would it make sense? I would just start with just placing them somewhere, and then we can move them when we've checked everything with Fibonacci levels and so on. Because I have to consider guidelines in a diagonal pattern. So what are actually Fibonacci guidelines? Well, I have a wave 1 and a wave 2. So I know that a 3rd wave should normally get to the 123.6 extension. So let's double check that, or higher. Ideally, even the 138% extension. So, and this high here in to 2018 didn't even get there, but it did get there, yeah, in January 21, $87, hit the 138% extension. Yeah, so I would first of all leave the third wave there. So at least we have the third wave placed, and then I would go into the microstructures to see, does it actually make sense? And in a diagonal, I already mentioned, we're dealing with corrective subwave structures, so I have to find a way to label this as an ABC. So that means we have an A wave, we have a B wave, and C wave is 5 waves. Just visually, it kind of makes sense. So I've got this as an A wave, B wave, yeah. And then 5 waves in wave C. Does it make sense? Yeah, if the C wave is again an ending diagonal, it's not a beautiful diagonal pattern, but it is valid. This is where we get already to a chart that kind of you cannot trust, because the ending diagonal here has a very deep wave 4. It's okay when they overlap. The wave 1 and the 4, they are allowed to overlap in a diagonal. But then this third wave was quite short. I just need to make sure it's not the shortest. We can double check that. If it's not the shortest, it's fine. But it did not reach my normal, let's say, minimum expectations for a internal third. Not quite, right? So I could also make a case to say, okay, maybe this is the third wave. Possible, yeah, possible. You know, this is where you then come up with alternative scenarios, which we don't have much time for today. But again, you see the problem with diagonals. They are less clear than an impulse. With an impulse, you get 5 Elliott Wave analysts, and you have a chart, and you have an impulsive chart, and they all tell you the same. But if you have a diagonal, you'll get lots of different opinions. So, but anyway, we can leave it like that's at least a valid count. So then the next thought would be, okay, is the wave 4 already in? It can be. Fourth wave might be in. The problem here is, yeah, no, the fourth wave can be in. So we've even hit the next fib level. Technically speaking, I could even say the fifth wave is topped. I could say that. That would be one of the scenarios now, right? It's just barely above the third wave high, but it's reached the next fib level. That's valid. But I would say, okay, until we break below that low there, so I then need to decide, okay, what would be a level that needs to be broken to the downside to confirm that further? Well, that would be that low, the beginning of wave 5, right? So until that's broken, I could say, okay, I have no evidence, right? So we'll see if it can push higher. And we are looking at a fifth wave extension, which is normal because a fifth wave would be an ABC structure in a diagonal. So we can map what would be standard support for the B wave, which is here between $36 and $66. So I can remove the upper section because we've broken that already. But this would be the zone. And then as long as we're holding $36, at least don't get a decisive break below, I can watch for one more high. Now I could say, okay, then we will label it with the alternative, where we'll say, okay, maybe is this already the top? I can do that. But I don't know until I get a break below support, okay? So then it's about a question of reward and risk. Does it make sense to go long now? Well, now we're kind of already, if I go to the smaller time frame, we've already left the support area. This is where we can then identify setups. Yeah. So if I have let's say potential A wave completed, we are hitting support, and then I'm looking for entries here in that zone. And when the market moves out, I can adjust my stop, or I'll prepare for another dip potentially, right? So I have to have my stop somewhere. And then it's time to watch for a fifth wave up. And then obviously what we can do is calculate a projection target for the C wave. Now we do that by taking the length of the A wave. We have a potential low in wave B. It's a bit early to confirm that, but just to show you how that's measured, we would then be looking for the 100% extension at $198.04. That would be for this C wave here. Yeah. So that would give us a full wave count. Obviously, we could, go into the nanostructures of all of these to try to label them all, but honestly, something is obvious. I mean, this here cannot be an impulse. It's clearly 3 waves. This is clearly 3 waves. For practice, I would recommend that when you do this yourself, you go into the nanostructures and try to come up with wave counts that make sense to track really, okay, is this here in the beginning really a 5-wave move? Is it an impulse maybe even? And it certainly does look like it, right? We do have 5 waves to the upside. Can easily label that. We don't have too much time to do all that in this video, but I could label that as 1, 2. This is certainly long enough for a 3rd wave. We've got a 4th wave and a 5th wave. And then this here could be a 5-wave move in between as well. And bear in mind, there is not going to be the perfect wave count. But what you want to make sure is when you have a wave count, you just want to double check that you don't have any obvious rule breaks. And they're also not on the nanostructures. But honestly, looking at a chart like that, when you're actually actively trading it for a swing trade, you don't need to label the internals of the 3rd wave from 2018, right? It's a waste of time. This is more about, okay, do I have a wave count that I can use to make decisions? That's really what it's about. And whether that count changes in a month or so, doesn't matter today. I want to have a chart that I can use to make a trading decision today. I need to know support. I need to know my invalidation point, which is here, the low of the wave 4. And based on, I need my targets. So I can calculate reward and risk. I can think about, okay, where according to my trading plan, I could enter this chart, I could enter a trade. Whether that might be a breakout or a pullback trade, depends on personal risk tolerance. There is no perfect way to trade, right? But these are different strategies. And yeah, I mean, obviously, whenever we're dealing with a chart that is not rallying in 5-wave movements, this one isn't, probabilities are not going to be that clear. So unfortunately, this is pretty much at the end of a rally most likely, and it's never really rallied on an impulse, this chart, only in the beginning in this A wave. So it's not the cleanest chart, right? You have a lot of overlapping price action, but it still has been printing higher highs and higher lows. So you can use the previous swing lows always as a stop, for example, or as a key level, right? That might act as a warning. So yeah, that should give you a good idea of how an Elliott Wave chart is labeled. Let me know in the comments if you like these types of videos. Obviously there's much more to it, going into the smaller time frames, checking for the different time frames and everything, developing alternatives. We already developed an alternative, but then it typically makes sense to develop that a little bit. And it's all a matter of how much time do you want to spend on a chart. At some point, it's like, okay, I'm 80% there, that's enough, for me. Or do I really need to go into every small level of detail? And well, it might take me 2 hours, but in these 2 hours, I could do 20 more charts, right? And at some point, and that comes with experience, that more micro counting will not give you more clarity. So sort of as a last tip, it's about developing a wave count to a degree, to a level of detail that adds value. At some point, it will just not add much more value. And you just do it for the sake of labeling, which is not really what you want to do. So anyway, that hopefully helps you. I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you're interested in additional updates, make sure that you subscribe to the channel. You can also check out our More Trading Online channel and our stocks membership. It's linked in the description. Also our crypto channel, Morecryptoonline, and the crypto membership if you're interested in these Elliott Wave counts, educational material, and so on. This chart here, for example, is one of the stocks that was requested within our stocks membership with the highest tier, the pro membership. I think there are 2 spaces available right now. While I record this video, it's limited because of capacity. This chart was requested through that process. So as a pro member for our stocks membership, you can actually request 2 charts per week, and I label these for you. And this is actually one of the charts that was requested. So I thought, well, why not actually combine that with an educational video that helps everybody? But yeah, these spaces are very limited. They are limited to 40 or so because of capacity, obviously, right? So we cannot take so many requests. So yeah, but if you're interested in that, check it out. There are 2 spaces. I guess they'll be gone very soon. And the link is in the description, in the comments section as well. And I wish you a great day. Thank you very much. Bye-bye.